Good morning, everyone. This is Ryan Edner with your Wednesday, September 4th market comments. We're going to start off in corn, looking at the good to excellent ratings from yesterday. The good to excellent ratings did move up in corn 1%, just as trade had expected. We do want to point out here again that obviously good to excellent ratings aren't exactly what you want to use to determine estimates for next week's yield changes from the USDA. After all, the good to excellent ratings are off about 20% from the 5-year average right now, while yields are only off 4%. So once again, a good thing for us to follow right now, but not something we want to use to determine next week's yield. Looking at the morning forecast maps, there's still no frost risk in the 10-day outlook. There are some below average temperatures out into the northwest, such as Montana, northwest, North Dakota. But again, cool weather, not really anything that's suggesting a frost just yet. Yesterday's trade in corn did see some light fund selling to start the day. Of course, we saw some more fund selling once contract lows were taken out. So we do want to keep a close watch on any fund trade as we see it here this morning after 8:30. Next support on the chart, a little bit tough to find now at new contract lows. The continuous chart would suggest 335.5. The December continuous chart would suggest 355.25. Over in beans, trade expected the good exit rating to rise 1%. It didn't. It stayed the same as last week at 55%. That could cause a little bit of added support here in the beans. We did not see much, if any, funds selling in the beans yesterday, which is another factor that might lend a little bit easier support to the beans today than corn. And lately, trade has been talking a little bit more about bean yield declines on next week's report than they've been talking the corn yield decline. So that's a third factor which could add a little bit of support there. We do want to point out that the chart shows trade has had recent problems getting the November beans above the 880 level. So if we're looking for any kind of short-term resistance, that could be it. Moving over to wheat, earlier this week, the dollar moved to fresh 3-year highs. We do know the wheat is the market most affected by the dollar. That was a very likely factor of what helped move the wheat down so much as it was yesterday. The dollar is taking a little bit of a breather, so is wheat, trading a little bit higher in the overnight. Another thing we want to point out is that Paris wheat futures hit a new year-long low a couple days ago as well, showing that overseas wheat continues to grind lower. That is, of course, pulling on our wheat as well. Lastly, moving over to cattle, funds were quiet here. The national show list plus 12,300. That show list would imply about a $1 lower cash trade. But going back to what we first mentioned there, funds are quiet. We saw that in the Commitment of Traders report from Friday. They are flat, and with funds flat and quiet, we did see some bargain buyers in the cattle here yesterday without any bullish news per se for just yesterday's trade. So it looks like some buyers are coming into this cattle market less afraid that funds will be here. So we could see a little bit more support from that. Of course, we do, again, have to factor in that plus 12,300 show list, which would imply about a $1 lower cash trade this week. It is Wednesday already, so we could see some cash bids as quick as this morning. We'll keep an eye out for those, and we'll watch all markets as we normally do. If you have any questions, again, call our office here anytime.